Hey, what's going on? So I'm back testing uh, ICT strategy and using this as content for the channel. So this video may be a little long. So you may want to, but this is how you back test. And this is how I back test these different strategies. So delete some of these lines and then I'll show you what you're looking at here. All right, quick. I'm glad the screen recorder software is not bogging me down, the one I'm using currently. Okay, so what you're about to witness here is me actually back testing the New York Open on US 30. Okay, it's an indice, it's a futures. So this box right here is the previous day's 1:30 to 4 o'clock range, the high and the low. So ICT says this algorithm will want to reach for liquidity areas, but if price is too far away at 9:30, like you can see right here, this is my 9:30 line. He said then mark up the London high and the London low. So I marked up this range right here. And then you see price, it comes back up into the London low, which is here. And then it takes the low and continues to go lower. Sometimes New York Open will run in the same direction as London. So it kind of gives us a heads up or a clue of what New York may do. So let's go ahead and keep going to the right. So I'm back testing this for 5 weeks and I'm taking screenshots. So what I want to do now, since I already took a screenshot of this yesterday, I'm gonna drag, this is my white line is the new day. So the new day for us is midnight. So this is 9/6. If you see the date at the bottom, so now I'm looking for 9/7. So I think it's my first time showing how I back test. And that's why I like using different software. Like this is investing.com. I don't just use TradingView for everything. I like investing.com. I just like having, even though it's not advanced as TradingView whatsoever, I still like just using it sometimes. Actually, I like day trading on it, to be honest with you. And I like having this chart up and TradingView chart up. I like having different markups. Instead of just having one chart marked up, I like having 2 or 3 charts marked up with different ideas from ICT. Okay, so the way this works is now we're going to mark up this day here. Like I said, this is more ancient than TradingView because it only shows you the dates. But I like TradingView because it says 9/7/2023 and it shows you the actual day, which is important. So now what we want to do is find this is 9:30, that yellow line. So now I want to find the highest high and the lowest low from 1:30 to 4 p.m. the previous day. Okay, so what time is this? This is 1300. I think we probably could mark up that low, but he says 1:30 to 4. So this is 1:30 here to right here. This is probably the high right here. And this is the 1:30 low. Okay, you see that? Look at the little white shaded area at the bottom. It says 1340. So this is the 1:30 low, and this is the highest high, after 4. So what he says is we could bring this range over into the next day. Okay. And I'll show you. Now, this is my 9:30 line right here. So I want to keep dragging the chart all the way over till I don't see the candles. Because remember, I'm about to show you, you're about to see like if what I'm doing is working or not. Because you literally don't see how I would trade. Because remember, I don't know what the candles look like to the right of the chart. So whatever you see right here is literally how I would have traded the situation anyway. And that's what I'm about to show. So these are my lines. I have to mark up the highest high and the lowest low before 9:30. Okay. And so I want to keep dragging the chart all the way over and keep looking at the price. Because once 9:30 hit, I want to stop the chart. I don't want to see price to the right. I don't know what this is, but I need to delete it. I have some previous markings on here. I use this to actually back test my day trading strategies, which is stuff that I may come up with on my own or ICT stuff. I actually love back testing. I mean, I don't know, why people don't like doing it, but it's crazy to me. But it's like Olympic training. I mean, why wouldn't you want to back test? Like this is like training for the fucking fight that's coming. because the fight is coming. When you get in front of that chart, you got to know what the hell you got to do. It's like being in a boxing ring, literally. You know, you can get the big payday if you have your skills right to beat the other boxer, 30 million in one fight, or you can get knocked on your ass and not make as much money. I think that if somebody making 30 million in one night, the other boxer probably make like $1 million or some shit. I think it's skewed like that. Okay, so I just found my 930 line, right? You see that? And so I don't want to see any candle price action to the right of that chart. So what I want to do now is I want to find the highest high and the lowest low before 930. So what I'm going to do is I'm going to get these horizontal lines, and I'm going to mark up the body lows, not the wick low. I'm going to mark up the body low with a yellow candle. So for the body low, I use a dash line, and for the wick low, I use a dotted line. That's just how I see it. Okay, I don't want to move the chart whatsoever because I don't want to see the candles to the right. So this is the closed body low of the red candle. See that red candle down there? Now I'm about to mark up the wick low, because a lot of times price will do something called ICT or rejection block, where price will go right up under the candle because there's money up under the closing price of these candles as well, not just under the wicks. You really have to see that for yourself to make it make sense. Okay, so this is a low before 930, right? That's a low. We have a low right here. Uh-oh, I just moved the chart. Hold on. Go back to 930 with the huge green candle. Okay, I don't want to see any more candles to the right of that. See right here? I don't want to see any candles to the right of this green candle. Okay, so this is 930. So we want to find the highest high and the lowest low before 930. So I'm about to literally trade this as if the chart was live, because remember, I don't know what the price action is doing to the right of the chart. That's why you have to wake up a little earlier and mark everything up. So this is the highest high that we see. Let me see if I see another one. It may be another low. That's why you got to scroll to the right of the chart. I see another low down here. You see that over here? I don't want to move the chart because then the candle price action to 930. So I see it's a low right here. So I'll be mindful of that. This is a quarter point as well. These quarter points is important, extremely, especially when you trade indices. I know people who don't even know where they're going to get out at. They just use the quarter points as a target, which is crazy. They don't even use a Fibonacci or anything. They just like, well, I'm just going to get out the next quarter point. I don't care if it range. I think price is going lower, so I'm just going to get out here, even if price is all the way up here, because they use quarter points, which works. Okay, so what I do with these white lines right here is I want to mark up the most recent low before 930, which is down here. Okay, I'm going to use a big white line for that, and I'm going to use the most recent high up here for 930. Now these little white lines, these white lines I'm going to use for like other body candle highs right here, like right here. Let me show you what I mean. I'm only going to back test maybe 2 more days, and then I'll end the video. It's not going to be like a super long video. I'm trying to make it super long. So this is above a 5-minute candle close high, and then here's another high. So if price is going up, I know that price may want to keep going up. So the way it works is, according to, let me see what London did. Where's the London high and the London low? Because remember, London is from 2 to 5 p.m. So London is, okay, so the London high and the London low kind of matches the recent high and the low here. This is the 1:30 to 4 p.m. previous day range. The reason I have this box on here for people that's actually watching this video is because when you trade in stocks, the market actually closed after like 5 p.m. It's not open anymore. It literally closes. The next day it opens at 9:30, which is New York open. So what I'm trying to tell you is that this little range right here with this blue line, the New York Stock Exchange traders don't see this price action. You see how it's just ranging? Now you can make money off of this if you understand purge theory, but a lot of people don't want to trade until New York Open happens. That's when the volume is in the market. So it's a way to toggle this on TradingView where the end of this candle will literally be the beginning of this candle. And you don't have to see all of this. But if you don't have that, because investing.com, they don't have that option. So I have to physically draw it on the chart. And I actually like seeing it just to see how much price is ranging. A lot of people don't trade S&P 500, NAS 100 during London session, even though you could find an early high of the day actually in London. Anyway, so the way it works is we need the whatever side of price action that price takes before 9:30 is going to run in the opposite direction. Now let me show you some screenshots of what I mean, because I'm actually going to be testing this all week because I'm going to be making money off of this all next week, every single day. Okay, so hold on, this one I probably need to delete. Okay, so this is 9:30 right here. So price took the sell side at 9:30. Okay, so if it took sell side at 9:30, you just wait for it to take it, and then the only thing it has left is sell side. So the sell side liquidity was down here, where these purple lines are. So you could have took a short here or here, and just held it all the way down to, this is a quarter point right here, that line right there. So you see how I held that quarter point, and it was hard to break it because that's what the orders are. And then it went up again and then broke that quarter point and went down to the liquidity below these red candle lows. Let me show you another screenshot. Here's another one. So what I'm trying to tell you is that whichever way price takes liquidity before after 9:30 is going to go in the opposite direction. Okay, so like right here, the last thing that was took before 9:30, which is this white line, this yellow line right here, was sell side. So the only thing that was left over was buy side liquidity, which is the money is money above these highs up here. That's why price went in the opposite direction. Okay, it actually took out a high right here, right at 9:30. Hold on, let me show you one more screenshot. This is the 9:30 line, the yellow line. So it took buy side right at 9:30. Okay. And then it took sell side. So this is actually, I think this is news right here. So let me show you what I mean in a live example. This is kind of like live because I don't know what the candles look like to the right. It's kind of the same thing in a way. So first off, you have to ask yourself, what's the structure? So you have to understand ICT market structure. And so immediately I see a mitigation block, and I'll explain what that is. Okay. Like he says, once you see it, you can't unsee it. So I see a mitigation block, meaning I see a high and then I see a lower high. So we have to look at the last down close candle in between this high right here and the lower high. It's this candle right here. See this? It's this candle right here. Hold on real quick. I had to scratch my head real quick. So what I'm saying is that this is the mitigation block. So what we want to do is draw this all the way over to the right, because this lets us know that this candle right here may want to push price down. So if price comes up into this candle, unless I see a huge bullish candle, it might want to reverse. Okay. So let me label this a red box, a red shaded box. So you have to that's why you have to wake up like an hour early and mark everything up. So I'm not just depending on the pattern. I'm not just depending on what ICT is saying. I'm actually looking at the actual structure. Now, this box as well, this blue box, is money above and below the high. So we have to look at what happened last. So if you look at this structure right here, what happened last? What did price action do? It went up, took these highs to the left, right? It took this high, it took that high with this candle high, right? Then what did it do? It went down and then it took that low. So what happened? What is the last liquidity area that we have before 9:30? The last price action that was taken was sell side. So actually, I should have. You know what? What I'm going to do on the next one, I'm going to do at 9:25. I don't want to see what that 9:30 candle does. I want to see, because sometimes you can get in before 9:30, even though some people wait until 9:30 to trade. Okay, so right here, remember 9:30 is on the next candle. It's 9:25 right there, that last candle. So you have to ask yourself, what did price do last? So let me pull this chart up. So you have to ask yourself, well, what did price do last? So remember, the last thing we see before 9:30 is sell side was taken, right? Let me drag this down. Okay, so I'm gonna drag this down and put sell side. Sell side. Okay, so basically the way it works is if sell side was the last thing that was taken, then the algorithm will want to go and reach for buy side liquidity, which is above these highs right here. Okay, so what I'm going to do is, we know the next candle is a big ass green candle. You already know that because I showed you what 9:30 is. But tomorrow on the next day, I'm not going to show 9:30. I'm just going to show 9:25. So what I'm thinking right now is I could go long right now. Based on what I'm seeing right now, I can go long. So what I would do is I'm going to get the long candles, the long position. I'm sure you want to put my longs at. Based on what I see, what I'm going to do is put the little red box is where the stop loss will be. So I'm going to go ahead and go long at this candle here. And I'm going to put the stop loss below this candle. Actually, yeah, I'm going to put it below here. And so my first target to get out at will be, let me show you. My first target to get out at would be, because I'm going to put 3 positions on, okay? Actually, I'm put on 4 positions. And every time price go above this white, now to be honest with you, price is probably in an algorithm structure to come up here, okay? But sometimes it won't come up here. Also, this is a range, so we have to look at 50% of the range, because sometimes price reverses off 50% of the range. This is the current dealer's range, what ICT call a dealer's range. This is a 50% line as well. So if price can get above this 50%, then we probably can come up here. But I'm about to tell you where I'm getting out at. I'm putting on 4 positions right here on this long position right here. And I'm gonna get out every time price come above these white, these the green candle closes. That's why you see I'm putting it on the body and not the wick. Because price will do a rejection block, meaning that the wick will go above the green candle. And you'll be waiting for price to take out the wick. And price would have reversed on your ass and you'll be looking stupid. So I put on 4 positions here. I'm put a stop loss down there. So let's see what price did. I'm gonna go 1 candle at a time. Oops. Okay. So as price, we see a huge candle up here. Now remember, we had this shaded area up here is a bearish mitigation block. Okay. So we already know price could come up here and reverse. So I got out right here, and right here. So what I would do now, since I don't have any other positions, is I would believe that price wants to take out this high, which kind of makes sense. We also have a quarter point up here. You see this? This is 34,500. Look over here to the right of the screen. See this right here? I'm to the left of the screen. This is a quarter point, 34,500. So this kind of makes sense. This is a bearish breaker. I'm sorry, bearish mitigation block. Remember right here? We got a high, and then we got a lower high. And then the lowest down close candle in between that is a bearish mitigation block. Okay. You have to look at the actual structure as well before 9:30 to see what you see. Instead of just saying, okay, I'm just going to mark up the high is high and the low is low. You have to understand ICT structure, the way he teach it. So what I'm thinking is, okay, since I'm out of my positions, because remember, I got out above all these candles. Now I don't give a damn. Yeah, this is a huge green candle right here, right? But a lot of times you're not going to see this. You're not going to see a huge green candle. A lot of times price going to chop. A lot of times you're going to do something like this. Then what you're going to do? You have to know where price is going. A lot of times it's going to go up and then chop down. And then you may think it's reversing. It's a difference between price retracing, which is what this is doing, and then reversing. Okay. This is a reverse. I mean, this could be a retracement on a higher time frame. but you don't want to hold through this. So what I'm saying is a lot of times you're not going to see a huge candle like that. You're going to see something like this where price go up, go down, go up, go down, only to come up to this area to reverse. Okay. So what I'm thinking right now is I don't have any position, so I'll probably go short right at this. I probably will go short right when price hits this mitigation block, okay? Because I don't have any other positions, long positions, because I sold all of them when it hit these candles. Even though this is a huge green candle, every time price came up here, I closed, I closed, I closed, I closed. So I'll probably go short when price hits this because it would have took buy side out the market. So the next thing will be sell side, which is down here, this white line right here. It seems like price should come down here and take that out. See what the next candle does. Okay. So this is a rejection candle right here. Okay. You see the red candle right there? So I would, it also hit a quarter point. So I probably would go short right here. Price could continue to push up. And I'll probably put a stop loss above here. If I get stopped out, so be it. I wouldn't put on a lot of leverage because I just made money on these 4 positions. So I would just put on, so if I put on like a standard here and a standard here, if I put on 4 standards right here, I would probably put on 3 positions for, you know, a 0.10, a 0.10, a 0.10, because I'm not about to give all the money back to the market I just made, but I do want to make more money, right? But my stop loss is going to be above here. So let's see what the next candle did. Okay. So the next candle is a green candle. Let me delete. I have some previous drawings on here. Now remember, prices continue to go up, and I may get stopped out because if it closes above here, then I'm getting out, and I just have to take that loss. But it won't be all the money that I made right here. You see that? You getting in on the second position, like Omar Asarif talked about. I think that's his last name. He talked about how if you get in on the second position, they lower your lot size so you don't give all the goddamn money back you just made. I mean, if you want to go in, to be honest with you, I should have been done for the day right here. But, you know, sometimes people just want to keep going, right? So according to the structure, it just hit this bearish mitigation block with this kind of wick rejection. No candle close in that zone up there. Price should reverse down to this line right here, or it should reverse down to this closed candle here. Let me actually put a line down here. I probably only do 2 days of this because I don't want this video to be too long. Now remember, this is the wick, this is the lowest low. But remember, price may do a rejection block, meaning, let me draw this. I mean, I used to get confused by this when ICT used to say this. I'd be like, what the hell is he talking about? Okay, so this is a rejection block. So you got a white candle. You got a candle here, right? Red candle, right? So you got a red candle, and here's the wick. Now, what I'm trying to tell you is that when price is coming down, actually, let me make this wick a little longer. What I'm trying to tell you is that a lot of times people gonna hold out. They're gonna say the low is down here. They're gonna be like, I'm holding out for this low, right? Let me make this a different color so it won't confuse you. So listen, a lot of people say, well, yeah, this is the low down here. So I'm gonna hold, or I'm gonna enter either when this low is taken, or I'm gonna hold my long position, my short position, all the way down to this low. But what they fail to realize is that there's money below the red candles. This is a red candle right here. You see this red candle? This is the actual low. You see this going down, I'm good for the day. Uh-oh. See, now price reversing. So to be honest with you, what I would have done in this situation, I wouldn't have waited to that candle. To be honest with you, when I seen a huge spike like that, remember, I wouldn't have waited a whole fucking 5 minutes for this candle to close. And when I seen a huge spike come up above it, I would have got out like right there. Boom. I still would have made money. I mean, bearish mitigation block. Let me take a screenshot. Boom. All right. So what I'm about to do now, I'm probably just going to do one more day, and I'm not going to be doing all this all day with you. Just going to do one more day, and then I'll end the video. I'm just trying to show how to back test, number one, and how to use one strategy to trade the New York Open, an ICT strategy. I did not create this. This is ICT shit. If I did it and if I put a twist on it, then I would definitely say it. But this is all ICT's teachings. You know, the man that literally gave me hope, gave me my damn hope back. Seriously. So let me delete the 4 p.m. range. So what I want to do is I want to drag this over. Hold on. I want to drag this over and find the previous days 130 to 4. Now this box is important. I know how to use it from based on what I'm seeing so far. This box is money above and below this box. That's the main reason I'm dragging it over. I'm just not using this as well. This is something new. I'd seen it. ICT say it before, but I didn't see it. But I saw it like 2 days ago, and I was like, hold on, that kind of makes sense. And the way ICT was explaining, he was just mad that people wasn't getting it. He like, how hard is this? Just mark up the previous day's 1:30 to 4 p.m. range, drag it over to the next day, and you'll see that price wants to target liquidity above and below this box. He's like, how simple is that? How hard is that? You know, and the way he was saying it is just like the reason I like listening to him, because he really want people to win. He don't even know us, but you can just hear it in his voice. It's like He just want people to just draw the red candle, and that's another indication that it wants to go higher. There's another SpaceX candle. This is my own terminology I created. When price opens up far below the closing price of the red candle, that means that it wants to go higher. That's a real gem right there. So I got